Good morning, welcome to the ADS Securities Markets Update. Beginning with the latest news from Greece again, the Finance Ministry officially rejected the creditors' bailout condition. However, the negotiations continues ahead of the Parliament debate later today. Moreover, Greece also requested to bundling the June payments until the end of June. However, we still believe that the negotiation will end up with a fair deal, at least in the next coming hours or maybe in the next coming days. On another note, the IMF head Christine Lagarde also weighed on the U.S. monetary policy and urged the Federal Reserve to postpone raising rates until the first half of next year, saying that the inflation is not progressing at a rate that would warrant, without a risk, a rate hike in the next few months. This means that the Federal Reserve should wait also until early 2016, even if there is a slight risk of overinflation relative to the central bank's 2% targets. The US dollar also recovered slightly yesterday on better than expected economic releases. However, all eyes today are on the US jobs report, which is seen as a key for or ahead of the Federal Reserve decision later this month. During the Asian session today, there was no economic releases. However, the volatility kept on rising, while the Asian equities saw another day of selling or sell-off due to the fears toward Greece and the continuous rise in the global bond yields. As for the European session ahead, today it will be very quiet as few economic figures will be released, including the German factory orders and the French trade balance. And also, and most importantly, the OPEC meetings will be held across the day with no estimates of a significant outcome, as most of the oil ministers hinted that there will be no cut in the production in this meeting. Going forward to the key event for today, the U.S. jobs report will be released during the U.S. session, and the estimates are encouraging after the ADP non-farm employment change added more than 200,000 in new jobs in May, and the non-farm employment change is expected to add around 222,000 in new jobs in May after adding 223,000 in new jobs in April. The unemployment rate is also expected to remain stable at 5.4%, and finally, the average hourly earnings may rise by 0.2% on a monthly basis compared to another increase of 0.1% last month. By summarizing the latest employment components, 8 employment components improved in May, while 10 components came in with weaker figures, and some of them also showed a sharp decline, such as the Chicago PMI employment component, the Dallas Fed employment component also, and the KC Fed or Kansas City Fed manufacturing employment. However, the key for the report will be again the wages growth. The year-over-year average earnings index is expected to remain stable at 2.2%, but if the jobs figures came in or showed a solid reading while the wages eased back again, this would be another negative factor for the US dollar and for the Federal Reserve not to raise rates in June's meeting. For more details about today's jobs report, in addition to the potential scenarios and potential trades for today, follow us on our social media sites, Twitter, Facebook, and YouTube to get our special report, which will be released very shortly. This is it for today again. Have a good day and have a good weekend. I'll see you once again next week.